Good morning, good afternoon, good evening, guys, and welcome to another video of Diving Trading. My name is Daniel, and today, guys, we're looking at Applied Materials Inc., ticker symbol AMAT. This is a company that's on the Nasdaq. It's a semiconductor company, so there's a lot of talk on semiconductors at the moment, or chips, as they call them. There's a lot of talk about it simply because of the fact that the demand there is not meeting, does not match up with the supply. So there's a lot of demand and there's not enough supply. So a lot of companies are having a few hiccups at the moment in relation, for example, to the cars. Where every car now has a chip, whether it's electric or not. Every car has a semiconductor, or more than one semiconductor. So there are a lot of companies around the world, such as Ford and your Neos, etc., are having to stop production of cars, for example, just as an example, or many other appliances, because there's not enough being made. Okay, so it's a bit of an issue, and at the same time, as an investor, it excites me because there are some companies here that I think have a lot of potential growth. Now, this company compared to, let's say, Nvidia or AMD is smaller. I mean, you have these are the big players in the industry, and one would say, why don't you invest in them? Yeah, the problem is I see them really as overpriced at the moment. So this has sort of deterred me. So paying $600, more than $600 for Nvidia, for me is a little bit too expensive. It's not to say that they don't have potential growth for the future, but I'm looking at a company that's going to give me more return on my investment faster, or greater return on my investment over the next few years. So this is why I'm looking at this company. So let's go in and have a look at the company. It was founded in 1967. Okay, it's actually an American company, but they also have subsidiaries in Korea as well. Okay, so yeah, let's have a look. So starting with the first thing, the PE ratio. The PE ratio, for example, is 32x, because actually below the industry. So the price to earnings ratio in the industry is 38.2x. So that's good. Earnings are forecast to grow over 6.13% per year. That's actually quite low, because they're actually producing higher results than that. But anyway, that's quite undervalued. So I would say it's more than that, but they're expecting to grow 6.13. Earnings grew by 36.2% over the past year, so very good results. Having said that, they have a high level of debt. Okay, but that debt, for example, if we start to have a look here, it has increased. It has from back in 2014 until now. Having said that, if we have a look at the debt to equity ratio, we have it at 47.5, which is really good. Okay, so in other words, the equity is 11.4%, 4 billion, and the debt is 5.4. So that's good. So even though debt has increased, okay, the equity has increased as well. So that's a good value for me, 47.5%. So they're more than covered. Not only are they covered by equity really quite well, but also they have a good cash flow. Okay, so operating cash flow is 77.8%, which is really good as well. Now, if we have a look at valuation, according to Simply Wall Street, and this may be correct in saying that it's actually overvalued. Okay, so the fair value of this price of this stock at the moment would really be around at $95.37. Okay, so yeah, it's currently set at $135. So yeah, I would probably agree with that and saying it's probably slightly overpriced. But are you willing to pay that premium for a company that you know is going to be $300, $200, $300 in the next 2 or 3 years? Yeah, so something you have to think about. Are you willing to pay that premium? Now, in terms of future growth, we should look at past growth, future growth. So this is this is looking to where we are now. Okay, up to here. This is the past. Okay, and if we have a look at the future, they're looking at some real fast growth here. Okay, right up to 2021, yeah, so 28 billion. So what they're producing at the moment is around about 28 billion. Okay, so this is good, interesting to see. Past performance, we can see that revenue has nicely increased. A lovely pattern here, and again earnings are looking quite good as well. This is what we've just looked at, the debt to liabilities. You can have a look at the short term and the long term, so both are looking very good indeed. Now this is the one thing that probably one person will be happy about, but doesn't excite me too much. Whether you're a dividend investor or not a dividend, 0.71% to me is like, I don't know. It's really with such a low yield. It's sort of quite annoying, to be honest with you, because I think is it really worth giving a dividend yield is 0.7? Wouldn't you be just best taking that money, investing it back into the company instead of paying out a 0.71% yield? Well, that's what the company does. So whether you're a dividend investor or not, this may or may not appeal to you. To me, for example, it doesn't. So I'm not really looking for dividends, and if I'm looking for a dividend, I'm not looking for less than 3%. So yeah, so there's a little bit on dividends. Now, if we're going to have a look at the first year, which is we're going to talk about, so the first year has actually been reported already of this year, 2021. So they recorded a quarterly revenue of 5.16 billion. So this is the first quarter of this year. So that's actually up 20% year over year. Okay, so remember they went back to saying that they were going to have a 6% growth over year. So like I said, I think it's quite underestimated. Having said that, it very much depends on what they can produce for the rest of the year due to the shortage. But I would imagine they can produce much better results what they're expected to. The quarterly GAAP EPS, earnings per share of $1.22, and a record non-GAAP EPS of 1.39. Okay, so that's up 20% and 40% year over year, respectively. Okay, so that's really, really, really good. And they've also generated 1.42 billion in cash from operations. So good. In terms of where the company is going, it's like the CEO said. So the CEO is Gary Dickinson. He's mentioned that we have a strong momentum across the company as their broad portfolio and exposure to technology inflections, combined with the traction of our new products, put us in a great position to substantially outgrow our markets again in 2021 and beyond. Okay. So let's go in to have a look at some other facts. Okay, so they are the leaders in materials and engineering, and they produce virtually every new chip and advanced display in the world. Our expertise in modifying materials at atomic levels and on industrial scale enables customers to transform possibilities into reality. At Applied Materials, our innovations make possible the technology shaping the future. Okay, so it's a nice introduction and really quite. I love to see that. Anything that mentions innovation to me sort of immediately catches my attention. They're the world's #1 semiconductor and display equipment company. Okay, so semiconductor and display company. So have revenues of 17.2 billion. Have research and development investments of 2.2 billion. They have over 14,300 patents. Okay, AMAT Stock listed on the Nasdaq. The headquarters are in Silicon Valley, so it's an American company. They have 24,000 employees, over 110 locations in 19 countries. They are voted Fortune's world's most admired companies. One of the most admired companies in Fortune, so good. And they were by Barron's. They were actually voted one of the most sustainable companies to 2021. Okay, and then finally here we have Investor Business Daily, the best ESG companies for 2020. Now we have a look at most recently. Deutsche Bank maintains a buy on Applied Materials, so they state it has been a buy, and they've actually raised their price target to $160. So initially it was $150, now they've raised it to $160. So the price at the moment is $135, and they've raised it to $160. So that's good. So we mentioned about the paintings earlier on. I mean, actually, you can go into those of you that don't know, if you're new to the investing world or don't know about this tool. This is actually a very useful tool indeed. It's called Docoh, D-O-C-O-H. So if you actually put docoh.com, You're going to search the company, and it gives you all the information that you need about the company. Okay, so if we have a look at, in this case, applied materials, we can click on patents. So I've gone here to this web page, right? This is it. It gives me all the data that I want, the news related to that, the press releases, calendars, the next earnings. So this is really a useful page indeed. So if I go in and have a look at the patents, I can click on patents. Now I can't remember where I put it. Here it is, patents. I click on the patents, and you can start to have an idea. I look at those patents they have. So I actually have 2,520 at the time recorded. So yeah, if you want to go through all the patents, feel free. Because I don't even understand half of them, but there we go. If we have a look at investors, inside investors as well, we can go down. We can have a look. This is also interesting as well. So we have the BlackRock. See, we have BlackRock in there, Vanguard. So we have really Capital Investment, Invesco. So we have the big boys in here that are investing in this company, which is also a promising thing. So yeah, we've got good news, positive. The company has growth, has potential growth. Having said that, come across this, which is probably at one's an investor's point of view, is probably not an attractive thing when you start to see the CEOs, or sorry, the executives of the company selling off their shares. So let's have a look at this. So most recently, the president and CEO Carrie Dickinson sold 105,000 shares on April 9th for a total of $14.7 million. Okay, so that's an average per share price of $140. So really quite a lot. Dickinson still owns 2.4 million shares. Okay. Yeah, okay, so it's not that bad actually. If you start to have a look at it, yeah, so the trim as an investors, we all do that, right? When we have a price or such a large return, we sort of trim off some profits as normal. So they're not selling all their shares. It sounds like a lot. It's because they had a lot. Okay, basically. So yeah, so he sold 105,000 for 14.7, and he still owns 2.4 million shares. So this is not so worrying. Okay, and the other person who was Prabhu Raja, which is the senior vice president, sold 50,000 shares. Okay, for $7 million. Okay, so again, a lot of money. They must be loving it. To get that investment, and again he sold at $140 a share, which is one of the all-time highs. But having said that, he sold 50,000, but Raja still has over 426,000. So yeah, again, this to me is not worrying. If we do see inside selling, if it's a big lump, if they're selling it all off, then there's something to worry about. But they still maintain a large amount of shares in the company. So let's have a look at pricing. So here we go with the price. Yeah, one would say it's quite expensive, probably is overvalued, but then again you have to stop and think whether you want to invest this for the short term or the long term. Now I'm looking to invest in this company probably for at least 5 years. That is my initial, could be 3 years, 3 to 5 years. So if we're looking at 3 to 5 years, and we're probably looking at prices in the next 3 to 5 years of round about $300, I would say $300 plus. What matter does it make paying $135 now or paying $120 next week? Your return on your investment over the next few years is going to be quite good. So yeah, in terms of price, it would be nice to have it cheaper. I agree. Having said that, I've plotted out these trend lines and resistance lines here, and you can see. I mean, this is actually good if you're a swing trader. If you're a swing trader, you could be really taking advantage of these bounces here. So here we've bounced off this support level here. We're to go into the upside again. If this continues up, we could have levels around about $153. Okay, which is what we're having a look, just sort of guesstimating here, $143. So yeah, you could swing trade this one. I'm not planning to swing trade this. I'm planning to hold this for the long term. So yeah, this is a great. Personally, I think it's a good price again, around about $130. It's $134 now. So yeah, I would look at how the price is going to be reacting next week, okay, to see what I'm going to do. But definitely this is a company that I want to be invested in. I have invested in a semiconductor ETF. Okay, I'll leave the link in the description for that one so you can have a look at that one. I've also done a review on AMD as well, which is another interesting one. But I think this company is interesting. Have I bought it? No, not yet. This is something I'm keeping on my radar to see. This is basically on the basis of how the market is at the moment. The basis on the market, how that is at the moment. I would see how this price is going to react next week. Next week I'm going to watch this very closely, and I probably, if I can catch this price around about $130, it would be good. If not, I probably would be looking to buy at this price. I don't mind buying at this price, and if it does drop, I could sort of average in on the way down if it does drop. But I can see the prices for semiconductors, for chips, increasing dramatically very soon. So this could be very, very beneficial for these companies because they're going to have much more revenue than what we're expecting. So definitely is one to be watching for the future. Let me know what you think in the comments down below, guys. Have you invested in Applied Materials? I would love to hear what you guys have to say. Give me your comments in the description below, or if not, do you like this company? Would you invest in it? Let me know. I'd love to hear what you have to say, guys. If you're new to the channel, make sure you hit that subscribe button, and if you've enjoyed this video, just give me a big like. That really helps my channel grow. Guys, thank you very much for watching, and I'll speak to you soon. Take care now. Bye bye.